This is Mark Anthony with Mercury Time Price Analytics, and welcome to our end of day trading video for April 28th. This is going to be a relatively short video, but we've got a lot to cover, so let's dig in. Every trader's got a different style. Some are day traders, some are swing traders looking for multi-day positions, and then there's very short-term traders. What you see on the screen is one of the two live charts that our members have access to every minute that the market's open, 23 hours a day, of course, with the exception of the 5 p.m. Eastern to 6 p.m. Market closure. Now, in the top center, you see our day trading algo. To the right, you have our short cycle algo for more frequent traders, and then to the left, our swing trading algo. So a couple of key points today. The tick point of control at 28.83.71, we're going to look at that in a moment. That was the key level that broke this morning, and now you did a round trip right back up. So if you're a short-term trader, over here on our short cycle chart, notice that on each bar you've got a white hash and a purple hash. And there is very complex mathematics behind these systems, but we designed them to be easy to use. So you're a short-term trader. It's real simple. White dash is above the purple dash, you're long. White dash is below the purple dash, you're short. So if we pull this out a little bit, it was short down into the close, and then in Globex you have this transition. And let me just zoom in a little bit so you can see how this transition occurs. So during this move down, you have the white dash below the purple, and as price accelerates lower, you get larger and larger differences between the two. And then as price starts to consolidate, it starts to narrow down. And in Globex, notice that this first bar in Globex, the two pivots, the white and the purple, were together. They start to expand upward, and you get this next move lower. And what's very interesting is what happened not too long ago. The white and the purple dashes get very close together. On this particular 4-minute bar, they mesh together as one, and then boom, you get this extension move on this particular bar. And you notice that the orientation of the white and the purple dashes goes from being completely merged here to now the white crosses back over. And I mean, price at that time, 64, and that was a key pivot level right at that time. But look what you got after that. From 64, you get a move up here to 76. You get the move back down. Now, that wasn't an invitation to short. Notice that the white pivot is still above the purple pivot. All this was a little consolidation, and then it goes again. And then you get another consolidation here. Notice how these two pivots, the white and the purple algo, are close together. That's not an invitation to short. The algo is still long. And boom, it goes again. You get this move up here to 28.90. Now, here too, that was not an invitation to go short. The white had not crossed back down through the purple. And what does it do? It goes one more time. You get a move up just above 2,900. And now we're getting another consolidation here. Now, on our day trading algo, when the cyan line, which is the momentum algo, when that changes orientation upward to downward, that puts the algo into the ready mode. The short triggers when these two white dashes cross through. And the same thing works in the opposite for a long. You had the orientation of the momentum algo go from down to up. You now have the directional momentum upward. And when you get the crossover, what this system is designed to do is these crossovers occur when volatility measured over the last 30 minutes, hour and a half, when volatility contracts relative to itself and then expands. See, the thing about volatility, the absolute value of the VIX, for example, doesn't really matter. What's more important is volatility relative to itself. In other words, when price is moving down here, volatility is expanding. Well, right here, when these hashes are coming together, you have this move up, but that really wasn't volatility expanding yet. The volatility started to expand after this came back down, and then you had the move up, and you can see these pivots start to expand. Now, what the system does is it gets people wrong-footed. So when you get this move down, early shorts come in here, and volatility is right about to expand in the direction that the momentum algo had already changed to right here. Now, if you're a longer-term trader, a swing trader, or you're a day trader that likes to take fewer positions during the day, the purple pivot here on our swing trading chart, this is called the matrix, because literally everything is tied into this one single purple pivot, period. We take this back a little bit. You can see that right here defined the high. Long above, short below. You break this pivot, you come down, and that price when that broke was $28.99. And what you'll get when you get these moves down, you'll sometimes get a bar where price goes right back above, but then doesn't sustain it. On the very next bar, it closes right back below. And that's what gets you this fast move down, because these folks that got caught long here, they've got to liquidate their positions, and then you get the move down. And we had the move down here into the low, 64.65 was a key level. And what you see here, these angled lines are algo time price regression lines. So if we pull this back a little bit, and I'll show you this on a full screenshot in a minute, you can see this very steep algo regression line here, the cyan line. That breaks, and what gives you the fast move is how severe this incline is. These regression lines are a formula of time and price. A regression line that is angled that steeply is not sustainable. So when it breaks hard. Now you come down here to this orange regression line, and what price does it fight over? Fights over that regression line, and then it releases back upward, and then you get the move higher. So here's what that looks like on a full screenshot. Now, let me just pause for a minute and say this. If you're trading the ES futures, either the E-minis or the micro minis, I have no idea how anybody trades this market without the type of algorithmic metrics that we have. And here's what I mean by that. There's an old trading adage that the market takes a stair step up and an elevator down. Well, this market takes an elevator both ways, down and up. Now, without getting into a long dissertation of why that is, there's much, much less volume. Here's the primary reasons for that. There's much less volume in the equity futures markets. And that has a lot to do with, number one, the fact that corporate buybacks last year were the overwhelming majority of market volume. Well, what's happening right now? Companies are conserving cash. They're cutting back on corporate buybacks. So there's much less volume in the market. And that's what gives you these sharp moves in both directions. So when you're looking at this tape, how do you know when to flip from long to short and vice versa? That's what our algorithmic metrics provide. Because algorithms that are based only on price work sometimes, but eventually they will crash and burn because time is more important than price. If you've seen any of my videos before, I've pointed this out. It's real simple. Let's say you and I were designing a computer algorithm to trade the market. Well, you can't anchor an algorithm to price because price is a vertical axis. It goes from zero literally to infinity. You can't anchor anything to that. Now look at a clock. A clock is round. You have the same number of hours, minutes, and seconds in every day. You have the same number of hours, minutes, and seconds in every trading day. The algorithms that the institutions use are anchored to time cycles, and there's quite a few of them. There's time cycles that are many hours. There's time cycles that are down to just a few minutes. but they all share the same fundamental math. All of those cycles are a fractal of one another. In other words, if you take the very long cycle and you go down progressively to the shorter cycles, all the way down to the shortest one, they use different time frames, but they're mathematically fractals. And what that means is, as you zoom into the shorter and shorter time frames, the math is the same. And I know that seems like a tough concept to grasp, that a short time cycle can have the same math as a very long cycle. Trust me, they do. They're all derivatives of one another. You take the longest time cycle, you work your way down. All of those progressively shorter time frames are derivatives of the key master time frames. There is very specific number sequencing in the cycles that ES trades on. And you literally find that number sequence all throughout nature, all throughout astronomy. It just is. That math is foundational to every living organism. I can show you where that math sequence exists in the periodic table of elements. If it exists in the periodic table of elements, and everything is made up of those elements, then doesn't it stand to reason that that same number sequence that I can show you is in the periodic table of elements affects everything in life, everything in astronomy? I can prove to you mathematically that God exists. You're looking at it. Now, that's a very long video for another time. But I can prove to you that God exists based on math. Math existed a long time before time itself. Time goes back to the first moment of the universe. Numbers are a man-made construct that's about 10,000 years old. Time existed long before numbers. Price is based on numbers. Time is. Think about that for a minute. Now, let's take a look at a couple of screenshots. Now, every line on this chart is a mathematical algorithm. If you and I sat down and we looked at charts, we could manually draw in support and resistance lines. You want proof that there is divine math throughout the universe? Every single line on this chart is based on a mathematical time price algorithm. You cannot draw lines any better than this. So last night in Globex, you had this move down to 54. Where did it stop? This algorithm was run before Globex opened last night. These Mercury band extensions, call them Merc band extensions for short, these were calculated based on the numbers at the 5 o'clock Eastern Time close. It is not a coincidence that in Globex you found the initial low, and this was from a couple of days ago, initial low here, and you come right back down. So this is a wide view. So let's go to the next chart. Here you see a close-up of the regression lines. You came down into this regression line, price fought over it, released, boom, went up higher. The day session, all of these pivots, and here's the thing, and I'm going to say this again, and I probably ought to say this on every video I do. The mathematics in these algorithms prove that God exists. Period. End of story. Every line on this chart was derived before the market opened. You come down here to the tick point of control. You stop on a dime. You bounce up and down, you break it, and you go down. The daily bull bear pivot for today was 2873.64. That was calculated 90 minutes before the market opened. You cannot make this up. You cannot just throw these lines on a chart in the morning. They're all computer-generated time price algorithms. And there is nothing on the market available for at a consumer level for traders that is this accurate, period. So let me show you the next slide. Now, we looked at the regression lines over here. This was taken early in Globex. half an hour, 45 minutes in Globex. Come down to the regression line. On these regression lines, price will come down to it. It'll fight over it. And then what happens when price recaptures the regression line? You get this. Our key long cycle pivot that only comes out a couple times a day, right at this time, was 64 and change. And when ES recaptured it, boom, right back up above. And let me close by moving over. And by the way, if you haven't been to our website, it's mercurysignals.com. You can find information about our ES subscription rates, weekly market reports. Had a little accident, fell down the steps Friday afternoon, late in the day session. So there was no market report this weekend. But you can find out more about our ES and NQ system, the technicals. We don't have a webinar scheduled. We'll probably schedule one for next week. But all this information is available for you on our website. But let me go back one more time in closing to this chart right here. It's real simple. White line is above the purple line, you're long. And when it's the opposite, you're short. Easy peasy. So again, if you haven't been to our website, mercurysignals.com, please take a look at our website. Most importantly, we hope that everybody in your home and your life is healthy. And most importantly of all, we thank you for your time. God bless you. God bless your family. And we will see you again tomorrow.